Welcome to the Leaders of Tomorrow show at PortfolioWealthGlobal.com. My name is Michelle Holliday. Today we are welcoming a very well-recognized figure, a truly brilliant economist who has a track record of nailing important trends which are covered by no one else, Mr. Chris Martenson. Chris is an economic expert, a researcher, and a futurist. He is the co-founder of PeakProsperity.com. He holds an MBA from Cornell University and received his PhD from Duke. Chris predicted the housing market collapse and the stock market correction years in advance. He rose to prominence with the launch of his video seminar, The Crash Course, which focuses upon the interconnected forces of the economy, energy, and the environment. His insights are in high demand by the media as well as economic and academic institutions around the world. Chris, welcome to the show. How are you today?
I'm doing very well today, Michelle. Thank you so much for the invitation.
Oh, we are thrilled to have you, and we are excited about this, your insights. Chris, we want to start off with some very interesting statistics.
Okay.
Millennial demographics have been outperforming baby boomers' retiree numbers since 2016. And by 2022, millennials will be hitting their peak earning years. Could this result in an American decade of wealth between 2020 and 2030 because of the new employment opportunities?
Michelle, I don't think so. And the reason is that it's not just the numbers. So once upon a time, what we really have to do is rewind and ask, how is wealth created? And wealth really is the function of real people taking real things and converting it into either goods or services. What the central banks of the world, including our own August Federal Reserve, started to do in the mid-90s was they replaced this thing called the business cycle, which I trust a lot as a wealth-creating mechanism, and replaced it with a credit cycle. And so what that means is we got this roaring 90s and then a bust. And then we had this roaring housing bubble that went bust. And we're back into that a third very, very large piece of credit expansion, which history as our guide says it goes bust. And I think it's really unfortunate. I think that the millennials as a generation have been shortchanged by bad monetary policy. No, not a slight on their ability to work, their creativity, or what they would like to do. But when credit busts happen, they're incredibly destructive. And we're in the middle of what looks like our third big expansion in credit. And it's been extraordinary. Wow. And so unfortunately, that's my view. Demographics is an important function. Of course it is. But also you have to look at resources and where we are in the credit cycle to really start to stitch this together.
Now, where are we in terms of the bust you're referring of? Are we in the middle of the credit bust or just starting?
Well, no. So the central banks of the world, so this is a global story now. We can't just, when I talk about how the three E's are interconnected, you can't just look at energy without the environment. You can't just look at the economy without those other two. They're all connected. So now when we ask a question about where are we, it's not where are we in the United States, it's where are we in the global story, because all the world's central banks have been basically pursuing the same strategy since the great financial crisis started in 2008. So we're 10 years into the story. And so you look at what the European Central Bank, the Bank of Japan, People's Bank of China, and the US Fed, those are the biggies. They've just been printing money like crazy, trying to get everything to go up higher. And they have gotten things to go up higher, including trophy properties, Gulfstream 5s and 6s, rare art, diamonds, stock markets, and bond markets. So they've really poured this money into markets to get them going. But what they haven't got going was a really robust earning cycle for people who are earning paychecks.
That for everybody else.
Yeah. Everybody else. They kind of funneled it into the markets and to the rich people, the 0.1%. And of course, they did really well. The predicament we're in, though, is that that debts and the other markers that the central banks have thrown into the markets, it's not real wealth. It looks like wealth, it smells like wealth, but it's not real wealth. And that's the tricky part in this story. That's why I say these things are in bubbles, because ultimately, a bubble happens when asset prices rise beyond what incomes can sustain. So quick example, it just came out today. Here we are at, on June 26th. And what I saw in the paper today was that in Marin County in California, they just declared that a family earning only 117,000 is where they're cutting off poverty levels. Excuse me?
Wow.
117,000, you're at considered poverty level if you're a family. How did we get here? Right?
Wow.
So think about that for a second. The average income in Marin County is 70,000 for a household. So it means almost all, by definition, the average or median household in Marin County is way below the poverty line. Well, why is that? Well, it's because houses, those asset prices are really sky high out there. How did they get there? Because the Federal Reserve wanted house prices to go back up. They jammed interest rates to 0%, bought a lot of mortgage-backed securities solely to create this appearance of wealth in the housing markets. And they did that, but this is a thing. They didn't create actual wealth. What they did was they took away from one party and gave it to another party. Existing homeowners won. Newly formed people who want to start a household, they lost. So that's the most important message I have about central banks is they don't create wealth, they redistribute it. They took savings rates to zero on our bank accounts.
Right.
And we lost that. Where'd it go? It went to the banks. So the bank balance sheets got repaired, but we lost out on over $1 trillion of savings income from our interest income. And what did that lead to? It led to the lowest amount of new business formation in the data series we've got because parents and grandparents didn't receive $1 trillion and didn't help capitalize the millennials and the Gen X's and Y's and Z's. They didn't get, that's $1 trillion missing dollars of more that we usually go into small business formation, which is the true engine of prosperity in our country. It's not the mega companies. It's the small and medium-sized enterprises.
Right. And those numbers, that $700,000 home is something that most Americans can't relate to. And that's the truth. I mean, it's pocketed in certain areas of the country, the rich, which aren't even considered rich in California.
Well, it's absolutely true. And again, the definition of a bubble is when asset prices rise beyond what incomes can sustain. There's nobody earning $77,000 a year that can afford a $700,000 house. That's just going to kill you. And so what we need to see is either a huge explosion in wages to catch up, or we're going to have to see those asset prices come back down. But this is why I like to tell the story the way I do. I don't think it's possible for people to get ahead unless they understand the game that's being played, right? And so the game is really important to understand, and the monetary authorities, the central bank, is very busy picking winners and losers. They've decided that the 1% should win, and the 99% by definition should lose in this story, and the statistics are full of this right now. Half of all households don't have $400 for an emergency, right? That's a really damaging statistic. And the reason I do the work I do is usually you read about that in USA Today and they're just like, wow, what a mystery. It's not a mystery. It's an act of policy. And if you understand the policies, then at least you have a chance to understand what the rules are and how to play that game better. Because if you don't know what the rules are, good luck.
Right. Now, Chris, in your opinion, and I think I know the answer now to this question, but we'll go into it, is globalization killing the American middle class? And if so, is there any way to come back from this? We want to mention that our founder of Portfolio Wealth Global, Tom Beck, he's been traveling throughout the United States, throughout what is known as the heartland of the country for the past 3 months or so. And what he observed is that there is truly two different Americas, as you were just describing. There are the globalists, which are thriving, and then there are the domestic industries, which have been languishing for years. Now, Chris, is technology the only game that the United States is a top contender for in the world today?
Well, no, this is a very complex question, and I have to let's pick it apart. Here's part one. It's absolutely the case that if you allow major corporations to chase around the world and find low-cost labor over here and low-cost supplies from over here, and then they're allowed to bring those products back and sell them into the United States, the middle class is always going to lose. And here's why. If you've been to China, I've been there a lot of times, or if you've been to Bangladesh, or you've been to some country where you see a lot of this cheap labor, you'll discover they don't have an Environmental Protection Agency or an OSHA or an Americans with Disabilities Act or. And I'm not saying these are inappropriate things. I love living in a clean, safe country. But if you say that the American worker has to compete against another country which has, excuse me, very different regulations.
Right.
On the only thing that we're going to keep level is the price. You have to compete on price when structurally it's so expensive. I have these emails all the time from people who say, wow, I went to the ER, I was seen by a doctor for 5 minutes. After my insurance was done with the bill, I had $6,000 bill left that I had to pay. My health insurance is going up a minimum of 22% a year for the past 8 years, which means it's doubling every 3 to 4 years, right? It's just, it's astonishing, right? So I have all of these extraordinary costs on healthcare, regulations. I just found out that the Supreme Court says that now, we're going to have to figure out how to pay sales tax in any of the 50 states I do business in. All of these things are just burdens that come to me, the business person. But trust me, Michelle, if I could take my business and offshore it to some place where I didn't have to collect sales tax and I didn't have any of these rules and I didn't, or the healthcare was free in that country or much, much cheaper, I would have a huge competitive advantage if I did that. So that's part of the story, is the United States has a very expensive business environment and open free trade borders. Those two things is a recipe with the equal sign after it, which says middle class gets hosed.
Wow. Wow. That's just, and you want to live in a safe world. We love our country, but we're regulating ourselves into oblivion. So that no one can do anything. You just can't move. So,
well, it's absolutely true. I'm a small business owner, so I can tell you, the cost of setting up an LLC and having legal and then compliance around all sorts of things and the tax structure. There's no possibility for me to do my own taxes, and it because it's just too complex. The filing is massively thick, and I have to file in all these different states, and that's fine. States need their money, and my property taxes go up every year, on and on and on. And so what you find here's just one way I talk about this is that we've gotten accustomed in this country, if I can put it this way. I hope this isn't too negative, but we run rackets on ourselves. And here's how I knew this. I went to Hong Kong for this meeting. I'm on a UN advisory panel for something, and a very nice meeting. Great. First time in Hong Kong. And a gentleman there has AT&T, just like I do here in the United States. AT&T operates in 2 countries. Hong Kong is not a cheap place to operate, right? No. It's a very expensive city. And we were just comparing notes, and my AT&T bill, because I've got my whole family on it, is, it's this thick. It's like, I don't know, 30 pages or something. And it all sort of sums up to about $300 a month. He had his whole family on his plan, and it summed up to $30 a month. And it was
in Hong Kong.
Completely unlimited, came on a single piece of paper. But the people in Hong Kong would never submit to a 30-page indecipherable billing monstrosity that totaled up that much. So AT&T is willing to charge whatever the place can bear. So if this was just me complaining about, complex cell phone racket being run here, but think about it. Think about any insurance you have to buy, and if your homeowner's insurance, if you don't read it, it's very complex. What might happen and what's excluded and what's in, what's out, and the average person, Michelle, only has so much bandwidth. I can guarantee you, I don't know every exclusion that exists in every insurance policy I happen to have. So it's just part of it. But when you look at how much it costs to just sort of live life, now it makes sense to me when we say the average family only has $400 or less in savings. I get it. Wow. I get it, because they are literally, that's the statistics saying they're hanging on by their fingernails. And the system has just basically charged as much as possibly can be borne, which is good business, but it's not great social policy. And it doesn't make for a happy, healthy sort of a country to live in. And I'm sure your founder has seen that. A lot of the places, if you tour the Midwest, if you tour the so-called American heartland, you see a raging opioid epidemic, a lot of demoralized people who don't really feel like they have the tools. And politicians, bless their souls, come out and say, you guys just need better education, as if it was their fault. And they don't set the rules that said it's an unfair playing field outside of our borders, and we're going to run rackets on you inside. And that's unfortunately what happens when you have a captive political system that corporations write the rules. And that's what they do.
That is just extraordinary, because Hong Kong is known as being one of the most expensive places on the planet. And AT&T, an American company, U.S. runs their company, and then in Hong Kong runs their company, and you compare the prices. That's very enlightening, shall we say.
Yeah, it's just it's just how it works. But that's my sense, is that
Yes.
we're gonna this breeds, I think, a large this is going to create a lot of political turmoil in this country going forward, because you can feel that,
Mm.
as people become aware of this, it's fundamentally not fair, right? And we're human, so fairness is important, and so that's, I think, what's starting to bubble up politically. We're seeing it in the Italian vote, the Brexit vote, Trump's election. This is all sort of a groundswell of people saying, hey, enough with the rackets, because Europe has tons of rackets too, so we're going to see plenty of turmoil around this. And that's why I think people need to march back and understand what the central banks are doing, because they're not just, some bankers tweaking a couple of interest rates numbers. They are actually facilitating running social experiments that we can clearly see they have some benefits, and they have a lot of negatives. And I think we need to have more conversation about that.
Can you delve into that just a little bit? Is there a way to nutshell what's happening with the central banks that are impacting us so heavily?
Sure. So let's consider Japan, right? This is a perfect test case. It's the largest floating retirement colony on the planet. So I look at it. Their population has peaked, and it's aging very rapidly. So what they need is a smaller economy that serves the needs of the people. But the banks, the central bank, what they want is they need growth in lending. So what have they done? Well, they specifically took the yen and drove it down in value. So that's the central bank's decision. We want a cheaper yen because it's going to help our exporters, Sony, Toshiba. If our exporters do good, then our country does good. That's their thinking. So let's look what happened. The earnings of Sony, Toshiba went through the roof. But again, central banks, they don't create that wealth. Where did it come from? Well, it came from all the people who live in Japan, where they have to import a huge amount of their food, 100% of their fuel. And so they had to pay more for all the basic living costs. So the central bank decided a policy, drove its currency down. It cost everybody who's a consumer in that country, and it transferred that wealth to some of their businesses. So they're picking winners and losers in that story. And that's what's really important to understand. When the central banks print money, they are picking winners and losers. And we're increasingly discovering that the losers in this story, as I mentioned, here's a partial list: savers, retirees, pension plans, students, middle class. Those are the losers. Data backs it all up. We can run through all the depressing statistics, but we shouldn't have to. What we should have is an honest conversation. Is like, wait a minute, should we really have students with $1.5 trillion in debt while we have a 0.1% that's rolling in cash?
Right.
That would be a good conversation to have, I think.
These student loans are they're a killer right they are tripping you right before you start your race.
Yeah.
Now, Chris, the Fed's fund rate right now is at 2%. Does this mean that gold is running the risk of resuming a bear market? Are there any similarities right now to the 1970s?
Well, it's a good question, because a really good predictor or a correlation for gold is usually the real interest rate. Real meaning after you subtract out inflation. So the real interest rate is hovering, according to how they run the statistics, right around zero right now. It will be going positive at some point in the next year, it looks like, but right now let's call it zero. The other thing that gold correlates really well with is federal deficit spending. And do we have a sea of red ink coming? $1 trillion budget deficits as far as the eye can see, according to the Congressional Budget Office. And that's if and only if there's no recession. If there is a recession, just double the numbers for a period of time. So that deficit spending has usually been very positively correlated for gold. So those are a couple of things just on the market side for gold. But when I'm tracking gold, what I'm really looking at, to me, it's not a hedge against inflation so much as a hedge against, let's say, systemic financial risk. And so what we've seen is a lot of gold, Michelle, has left the West. It's left the vaults of the United States and London and Switzerland, and it's gone east. It's gone to China and India in huge amounts, Russia increasingly now. So that flood of gold from west to east is an important thing to track. And it's really revealing that what we're also in the midst of right now is a very large changing of the geopolitical guard, where the United States was fully on top, and it's becoming a much more unipolar world. As you mentioned, we talked about China before. Wow, they're coming on like gangbusters and all of that. So understanding that is important to understanding gold. Right now, if I'm just looking at it from a market standpoint, straight to your question, all I care about really is how is the rate of interest very positive? It's not yet, but it's heading there unless inflation picks up. And the second thing is a level of deficit spending. And that, boy, there's a huge story on that. And I'll just leave it with that, though. It's $1 trillion as far as the eye can see now, 10 years at least.
Wow. Now, Chris, shifting to silver, has silver become demonetized forever? In other words, are we going to be staying accustomed to seeing silver at a ratio of 71 or 61 to gold?
For now, I think so. Demonetized, absolutely. I'm not aware of any country in the world right now which is still using it in any serious monetary fashion. About 3/4 of silver is used in industrial processes, though. If you said, Chris, Rip Van Winkle time, you wake up in 20 years, you've had an investment, it did great. Silver is actually very near the top of my list, if not some days on top of that list, and here's why.
Okay.
It is an absolutely vital industrial mineral element. And on the periodic table, it's the most conductive, the most reflective, has increasing antimicrobial and other medical uses. We're finding new uses for it all the time. It's in every cell phone, and we lose it when we use it because there's so little in your cell phone. Usually it's not recycled. It's just sort of lost at the molecular level, never to be seen again. So that's one side. It's very important demand because we need it industrially. We're recapturing very little of it. And so when you look then at mining worldwide and you say, hey, how many silver mines are there in the world? There aren't that many. There's maybe 25% of our supply comes from base metal mining. You're mining zinc, lead, copper, little silver's found in there. That's where most of the silver comes from. But for the companies that are out there trying to find silver, the ore deposits are smaller than ever before and more dilute. So right now, knowing what we know, in 20 years, all the known silver mines are actually depleted, and we don't know where we're getting more of the stuff. So I love it from a supply-demand standpoint. Final point, right now, I think today when we're talking, silver's trading about $16.30 an ounce, and that's below the cost of production for pretty much every silver mine I'm aware of. So if you like commodities, you love them when they're below the cost of production because either we stop mining it or the price has to go up. One of those two things has to happen.
Wow. Now, turning now to the subject of oil independence for the United States, is this continued dependence upon oil sustainable? Can America become an energy independent country?
Well, two separate concepts in there. I don't know who did it, but in February 2012, suddenly this concept of United States being energy independent was floated out, made it into this presidential State of the Union speech. I was like, what is this? It's a strange concept. And what happened was they took the total amount of energy the United States uses, we might measure that in BTUs, right? And so they put it all in one pile, and we're independent. The problem is you can't do that. Anybody in the energy industry knows you can't, like coal and oil are not substitutable. You don't use them in the same way. So instead you have to ask, are we energy independent with respect to fossil fuels, meaning natural gas on its own, coal on its own, or oil on its own? And the answer as of today is natural gas. We've just hit the mark where we're producing as much as we're consuming, and it looks like we'll have a few years where we'll be producing more than we're consuming. So check for natural gas. Coal, we've always had more coal than we've needed to use, and we're okay there too. Oil, we still import about 3 million barrels a day net, and that's probably going to remain true, that we're going to be a net oil importer as far as the eye can see, as far as the data I have. It might change, we don't know. But we're probably not going to be truly oil independent unless something really fundamentally changes on the demand side. Demand would have to go down. So with that, yes, we absolutely need oil. It's how 95% of everything moves from point A to point B. You are never really going to run a jumbo jet on batteries or a container ship or anything like that. Right. So we're going to still be using oil for a long time, and we are going to be dependent on it, no question. And what your listeners need to be aware of, however, is that 2014, oil went from $100 to whatever, 28 a barrel. So that really killed the oil companies exploring because they couldn't possibly explore at that price. And then so 2014, 15, 16, 17. So for those 4 years, we saw the lowest amount of oil investment globally on exploring upstream for new deposits, and as well as maintenance for existing fields. So with that, the oil industry is kind of like farming. We grew too much corn this year, so nobody plants it next year, and then there's too little, and it's got a 1 year sort of cycle. Oil has a 6 year, 5 to 7 year cycle. We'll call it 6. So that stuff that wasn't being found starting in 2014 is not going to be produced in the year 2020. The International Energy Agency is already pointing this out. Oil executives are pointing this out. They're all going, Houston, we may have a problem. And it's not something, Michelle, that you can quickly change just by throwing a lot of money at it. It just takes time. It's a 6 year cycle, kind of a long, slow business, just because of how complex it is and how much capital is required and all of that. So I'm actually looking for this idea that we're going to see oil prices get pretty expensive starting in the year 2020. And so rewind all the way to the beginning when you said, how are millennials going to do? They should be hitting their peak around 2022. That's right dead center of where I think we're going to be hitting an oil supply shock in this story. And again, nothing we can do. It's just oil prices went way below the cost of production. Again, if you like commodities, you love them when they're below the cost of production. Oil's been a great investment since that bottom in 2014 for that exact reason.
Wow. That's some interesting statistics. Now, Chris, you mentioned China and its explosive numbers. Their gross domestic product, their numbers seem to to outpace the United States' GDP by the year 2025. From your forecasting analysis, is this the end of the US dollars era? Where do we stand at this point in history?
This is one of the most amazing periods of history. As I sort of hinted before, we're moving from a unipolar world with the United States at the center of the whole thing to a more multipolar world. Huge geopolitical tensions and things going on behind the scenes around really West versus East at this point in time. So Russia and China kind of on one side, beginning to forge great partnerships. Every time I go to China, Michelle, I get train envy. They've spent their money on their infrastructure. You can get on a train that travels 200 plus miles an hour, a wine glass right on your tray that doesn't even ripple, and get right off in inner cities, from point to point. It's fantastic what they've done. And they're coming on in such an extraordinary rate, it's almost impossible to really get our minds around it. So here's one statistic. China, 1.3 billion people, a lot big number. They have about 20 million people a month moving from the center of the country out to the coast. 20 million a month. Well, 20 million is about how many people live in Houston. So that's basically they're building a Houston every month out there on the coastal regions. And the level of cement that they're using, copper, if you go there, it's just incredible industry. So I would be surprised if China isn't actually larger than the United States by several measures. It really depends how we're measuring this. But when you go there, they're incredibly, they love consumption. They're great capitalists, great business people. They really are very industrious. So they also want to come onto the world stage, and they probably deserve to do so. They're not in danger of supplanting or replacing the United States dollar as the reserve currency yet. I don't see it on the horizon soon because they're also a communist country. They like control, and to be a reserve currency, you have to open your government bond market to the outside world. And once you do that, you're no longer in control of it. Hot money can flood in, it can flood out. Look what's happening to Argentina right now, Turkey. Those places, they're not in control of the money coming across their borders, and it creates enormous difficulty for them. Like with Turkey, money's flooding out of the country, so people who own the Turkish bonds are selling them. Turkish interest rates are spiking. Then they take the lira, they sell them, so the lira is plunging at the same time. That's the sort of stuff that China doesn't want to lose control of, and it's why they can't really be a reserve currency until they do that. but they've done a couple of really sneaky things around the edge. Sneaky is not the right word. It's pretty intelligent, but they're kind of testing the waters.
Smart on their end. So
Right.
good
So
for us, right?
it's quite wide out in the open, but it was a clever way to get to this. So what they did was they began trading oil futures in their native currency, in yuan, onshore. And so to attract people, like if you're Nigeria and you want to sell your oil, you want to hedge it on the Chinese market because you're selling to China. Now you can do it directly in the Chinese market, but now you have a bunch of yuan. What do you do with them if you're Nigeria and you don't necessarily want those? So they also at the same time opened up their Shanghai Gold Exchange and said, oh, by the way, gold is now convertible in yuan and you can buy it directly. So both those things bypassed the US dollar. Both those things are reasons you would need the dollar as a reserve currency. And so now you no longer have to have the US dollar anywhere in one of the most important value chains that exists out there. Oil is by far the most valuable commodity traded on a yearly, daily, weekly basis. And gold is pretty big too, and it's very liquid. So they didn't open their capital markets per se, but they did allow people to come in and participate and walk home again without using dollars at all. So that's chipping away at the dollar's reserve status. Whether you call that clever or sneaky, but it really did a run right around how the system has been working for my entire life.
It's definitely very interesting. Wow. And a little bit scary for the US dollar, would you say?
Well, things change, So when I was in China, I think probably one of the most telling statements I got was from a pretty high-level person in the political party who said, Chris, the business of China is business. The business of the United States is war. And what he was saying was that the United States is busy trying to enforce its position in the world, and China's busy making deals all over the world. They're two different strategies, and we can, debate and decide for ourselves which we think is, the better one or the more durable one. But if you go to Africa now, it is literally almost like, China 2.0. There's so much China activity there. It's a huge continent with a lot of resources left. China's all over the world busy securing deals and inking deals, and they're building this One Belt, One Road initiative, which is the most aggressive, the largest, economic sort of initiative, basically in the last 50 or 100 years. It's a huge deal, and they're going to link up an entire, portion of the East through a single unified transport and trading environment. So they're working. I mean, they're busy cutting deals and doing what they need to do. And I have great faith that they will overtake the United States at some point, just because it's a numbers game. 1.3 billion is a huge number of people.
It really is. Now, Chris, shifting gears just a little bit, in your opinion, is blockchain technology something that is truly revolutionary?
Well, it is, and it's gonna transform a lot of things, like all technologies should, right? I love getting on a plane. Some people are like, oh my God, I can't believe my plane was 40 minutes late. I'm like, hey, at least we didn't get stuck in the snow pass going over the mountains in our covered wagons. I mean, technology disrupts things. That's great. And I've been of the things that the blockchain can disrupt, I say good riddance, right? I just bought a house recently. You do this crazy thing, and you got lawyers and realtors and all that, and there's all these crazy fees that sort of stack up, and two of them on there just gall me. It's title insurance and title search, right? What's a title search? Well, we have to make sure that the title's clear. Well, didn't the last guy who just bought the house have to do that? Yeah, but, right? Blockchain would completely eliminate that. It's a $28 billion a year industry that deserves to go away. Put it on the wall next to the buggy whips. And, once you have blockchain in there, absolutely. So I'm a huge fan of the things that blockchain, where I can see the opportunity, where it can come in and disrupt an industry, and I know how big that is. On the other side, in terms of a speculative vehicle, I think it got way ahead of itself, and a lot of people got caught up in the idea of using it as a way of making money. I haven't been as big a fan of that all the way through, but I'm a huge fan of the things that blockchain can really do, and that will include, at some point, actually becoming the money system, I think, probably for the world at some point.
That's outstanding news. Now, turning now to the stock market, you had said a couple of months ago that the validity that took place almost caused the system to crash. And
Mhm.
I was interested in you detailing what happened and why we came so close to a crash.
Well, this is gets to be a fairly complex story, but it boils down to this. I think we have broken markets, and here's why. Everything started changing right around 2008, not related to the crisis, the financial crisis, but all of a sudden we started having computerized trading coming on big time. And it got bigger and bigger and bigger to the point now that on any given day, 99% of all the quotes that are offered, like if you go and you're looking at a screen and you see IBM offered it, whatever, and here's the bid, here's the ask, 99% of those quotes on the screen are delivered by computer algorithms. And up to 75% of all the trades that happen are just between computers that are just trading back and forth, not holding them, but just basically just ping pong balling these things around. So it's a very computerized market, and also it's global now. August 15th, August 2015, I can't remember the exact date, China devalued its yuan by 3%. So here's a country all the way around the world, devalues its currency by some fairly trivial amount. And we had this extraordinary explosion. All of a sudden, the Japanese stock market started to get hit. The yen started to spike. The European market was selling off. The dollar, all this stuff, gold. It was just crazy. And it took a while for that to damp down. And when I analyzed that, I said, here's what happens when you have all these computers. They're all busy, operating at the speed of light, literally. All of them looking at the same data, trying to get relative advantage to each other. But when you peel all of that junk away and you say, how much actual trading is happening? Who are the market makers? Like if you got into a real air pocket and somebody had to step in, which is what the market makers used to do, and they're all gone. They've been replaced by these computers. So if we hit a pocket, what would happen? Who's there to make the market? Well, earlier this year in 2018, we had our answer. We had a volatility crisis. It was called Volumageddon. Volatility really spiked. And so volatility is just a measure of how much prices move in the market. So the volatility spikes, and the next thing you saw, Michelle, was air pockets everywhere. We saw markets really begin to break down. Certain markets went unbid, all of that stuff. And it became really quite desperate for a while when you talk to people who are in the business saying, wow, that was really close to a system, a thing that could have frozen the system, could have broken it. And blame for that, such as it is that, this is an entirely unregulated market in essence. The SEC is way outgunned. They have no clue what's happening. And I don't even know anybody actually does anymore. It's just all connected by computer. It's too complex, really, for anybody to understand. So we look at the symptoms and say, what could have happened here? And so I think we actually have fragile markets in the sense that they work great as long as everything's in parameters. And if things get a little dicey, these computers scurry away literally instantly. And no market's too big. We've seen flash crashes in the US dollar, the US Treasury market, any stock you can think of, any commodity, and by flash crash, I mean all the bids disappearing within 20 or 30 milliseconds, and nothing happens. So it's kind of a weird market that way. And so, listen, volatility happens. And I'm just concerned, like a number of people are, what happens when that volatility returns and it hits this market where we don't have market makers anymore. We just have computers. And they're very hard to reason with. When their algorithms decide we're out of here, they're out of there, and that's the end of that. So it's just understanding that market structure has been challenging and fun.
The system's really changed a lot, hasn't it, in the background? Everybody's sort of living their lives. I don't think most people realize how much the stock market is dependent upon complete computers.
Well, at the Chicago Mercantile Exchange, you had all the guys and gals in the gold and blue jackets, with the paper tickets.
That's
and
such an image.
The outcry, like, woo, that's the image. At any time there's a stock market decline, CNN, CNBC, they show that image, and they show, the people in the jackets with little frowny faces or whatever, right? But the truth is, those jobs all went away in 2016. None of those people exist anymore. So if they really wanted to show the market, they would show a blinking row of server lights. That would be, because that's what the market is right now. Those people don't exist, and those people were actually an important sort of check mechanism because they could always make a market if necessary, or they would know if somebody tried to sell gold for a penny. Trust me, a human would step in and go, I'll take it, right? But the computers, when they see things out of parameter, their algorithms shut down and they leave. And so that's what happens in this. Yeah, nobody knows what's going on. I talk to people who are deep in it, and nobody's confessed to me and said, yeah, no, I get it, I think I understand this. It's a very complex situation right now.
That is some interesting news. Now, Chris, what stocks are you bullish on at this moment in time?
Well, I'd love to answer that question. I am by law forbidden from mentioning specific stocks, but I can tell you sectors.
Okay.
I can tell you places, like things like that. I'm really a big fan of energy at this particular point in time. I like oil right here. I like a lot of what's happening in subsectors of the alternative energy space. There's going to be clear demand as we go forward. And when I say that, I'm really more focused at this point, not on specific companies, but I really like, for instance, the idea of cobalt and lithium and companies and sectors that are involved in those, because the base materials, when you strip it away, so, for example, if people looked at what the hopes are, we're going to have this much, all these exponential curves, we're going to have this much solar power. Great. Wander with me over to the resources needed to make a solar panel, and I got a great story to tell you. Which of the solar panel companies are going to win? Too hard for me to know, because policies and, there'll be tariffs and there'll be support and all that stuff. I can't figure that out, but I can tell you that every single solar panel has some silver in it. And every single solar panel has a tiny bit of, all these different elements, which we can see are clearly going away. And if you think we're going to electric cars, and we are, and China's got the most electric buses in the world, they all run on lithium battery technology. That requires two big things: lithium and cobalt. So again, there's some fantastic stories to be had there. And so really, the advice here is there's a lot of very overvalued sectors right now. I can tell you some I don't like at this point. I don't like anything with a PE, price earnings ratio, of more than 100. Hate them all. But is it easy to find companies and whole sectors even that are in that particular range. So I like the value. I like the real stuff. And there's a huge story going on, particularly when you think about what I talked about with respect to oil and what's going to happen out there 2020 to 2022. If you believe that story at all, you need to have some exposure to that sector.
Interesting. What are some of the sectors that you'd stay away from that you just hinted about? Just two or three of them.
Technology right now is way, way overdone. There's just the price earnings ratios on some of these things are just too out of whack for me to really even begin to get involved in. So definitely the tech sector, the so-called FANG with the T at the end for Tesla. There's a lot of companies in there that are doing reasonably well in terms of the money they're earning. There's some that are way upside down. So I like to do a good fundamental analysis and just say, what's the debt level? What's the cash flow of this company? What's their competition? All that stuff. So that's really the basis I come from. I know it's a really old school way. Nobody does that anymore. We just buy the stuff that's going up. But I'm a big believer that we will be getting back to value matters at some point.
So oil, and then cobalt, and things that go into electric vehicles.
Resources. I love a lot of resources here. That includes water. It includes food. So looking at the demand statistics and supply, we can clearly make a strong case for all of those sectors.
Chris, this has been an amazing interview. Please tell us all about your website, your videos, and how everybody can follow your work.
Well, certainly. I would love to. Thanks for the offer, Michelle. Peak Prosperity, that's P-E-A-K, like a mountain peak, peakprosperity.com, that's the main website. And there you can find the crash course videos and links to buy a book, Prosper. We've been talking a lot of the problem definition, and then the solution space is where we spend more of our time. And so Prosper is our book that talks about how to navigate these really uncertain times. About 90% of that website is free, and we have some content as well for subscribers only, for people who like to go a little deeper. You can follow us there as well at Twitter. And so at Chris Martenson, you'll find me there on Twitter as well. And Facebook, you'll find me at Chris Martenson as well. So just check all that stuff out, and but come by the website, and we got a great community of people who are really talking about these kinds of things we just talked about in depth. Love my community.
Incredible. Chris, thank you so much for coming on the show.
You're welcome. My pleasure.
Mr. Chris Martenson, economic expert and co-founder of peakprosperity.com. For the Leaders of Tomorrow's show, I'm Michelle Holliday at portfoliowealthglobal.com.